Jerome Powell just came out with his recent speech and they paused interest rate hikes, which everyone got super excited about. However, there was a couple of things that really stood out to me in his speech that I wanted to talk about today because I think it's going to affect us in the housing market even further. So if you're thinking about buying or maybe even refinancing or doing anything with your mortgage, you might want to watch the rest of this video so you can start coming up with a good plan that's going to make sense for you. And so that way you don't get hurt when things potentially crash. If this is the first time you're checking out my channel, my name's seanu. I'm an area manager with Geneva Financial, and we're helping you finance your homes all across the country. Whether you're a first-time home buyer, a seasoned investor, or you're just trying to figure out what you need to do with your current mortgage. If you have any specific questions, you can always hit the description below. There's a link to my email. You can schedule a call with me. I'm happy to answer any specific questions that you have, or you can just comment below. And if you love these videos, make sure to share this with your friends and family and subscribe to my channel. And I appreciate all the love of you guys hanging in there with me over the years as we've built this channel up. Now, the big news in the industry is that the Fed paused interest rate hikes. Everybody got so excited about this. However, if you really pay attention to a couple of things that Jerome Powell said, he really stuck to his guns that they want to get inflation back to about 2%. Right now, we're at about 4%, and there's still a ways to go before we get there. Now, what's scary about that in the mortgage world is that interest rates are still at about 7.5%, depending on who you're talking to and depending on what's going on in the market. Things have become so volatile, yet it's still not slowing down the housing market. So many clients of ours are buying houses across the country, and we're starting to run into multiple offer situations, and we're also seeing sellers take away any sort of incentives and closing costs. I'm even hearing builders release fewer and fewer homes to the market. They're doing these lotteries, and they're taking even longer to build homes. All of these things don't signal a weak housing market, which that's kind of what everybody thought was going to happen the minute that rates jumped up back in 2022 of June of last year. Yes, the industry has definitely saw a pullback in terms of production, the amount of homes that are being sold, and even as us being in the industry, the amount of loans we're closing, realtors, the amount of homes that they're selling. However, I think we're in like this weird period right now where you have a lot of people that want to buy. Maybe they can't qualify for as much house as they would really like, but they still try to enter the market, and maybe they just shop for a few weeks, couple of months, maybe they just don't find anything, maybe they're just too picky, but a lot of them don't end up purchasing homes. But then the ones that do, we are seeing more and more of these multiple offer situations where the market is so competitive again that our buyers have to have extra cash on the sidelines in order to almost play ball today. You can even see here in this video, this was a text message that I received from a listing agent that showed me how many people were outside of her listing ready to submit offers on her house. Check it out. So even though interest rates are where they are, I still think that the market has to get worse in order for things to get better. And Jerome Powell keeps sticking to his 2% benchmark of where he wants to get inflation to. And I don't even think we're anywhere near where we need to be yet. So that really means things have to get worse before they get better. How much worse? I don't know. I think the job market has to break before we get back to that 2% range, which means a lot of people are going to lose their jobs. Is that going to happen in the third or fourth quarter of this year? Who knows? But those are the types of things that I think if you are on the sidelines trying to figure out, do you get into the housing market? Do you wait? You have to have a plan. And one of the best ways to do that is to get pre-approved so you know exactly where you stand and you can find out how much cash you're going to need in order to buy a house today. Whether you have the money or you're trying to plan for the future, there's nothing wrong with going through that process because it's going to give you a solid game plan in order to get yourself going. Now, like I said right now, if we're seeing multiple offer situations, I've had clients today write offers above the asking price of the home, which means if the house doesn't appraise for that amount, we're going to have to come in with extra cash in order to make the deal work. So this is why I've been saying this. You have to be saving money on the sidelines. You can't be on the sidelines waiting to buy, hoping for prices to crash, hoping for interest rates to crash. I don't think that's going to happen. And if it does happen, if you don't have cash in order to play the game, you're going to miss the opportunity. That was a mistake a lot of people had during the COVID years because even though interest rates were into 2 or 3%, if you didn't have an extra $20,000, $30,000, it was really, really hard for you to get into a house back then because a lot of homeowners who had properties that ended up selling them during that time were cashing out at the top of the market. So it didn't hurt them to spend an extra $50,000, an extra extra $100,000 on a house, because the person that bought their house, you could almost make an argument that they overpaid for the property. So they took advantage of that situation and they were able to capitalize on the other side. So this is just something that I think we need to start paying attention to, get a budget. And if the Fed is going to stick to that 2% inflation rate, things are going to get worse. How much worse is that going to be? I don't know. But I definitely think it's something that we have to follow what the Fed says. And another thing that they're talking about is that they still think that rent costs are too high and they're trying to drive that down. But I can tell you, as a landlord myself, some of my properties are renewing right now, where we're going to renew the lease for the tenants, but we're asking for an increase in rents. In fact, one of my properties right now rents for about $1,200, I believe. And I could probably raise that to about $1,600, maybe even $1,700 on the really high side. So I'm under the market rent right now on that house. But I told my property manager, I'll increase it slightly because the tenant that I've had in there for the last 2 years has been a great tenant. So I'd rather not lose the tenant. If they're willing to maybe sign a longer lease, I'll work with them on the rental amount. However, if I wanted to just be completely capitalistic and just get what the market rent is, I could easily increase my rent $400 to $500 on that property. So if we're looking at overall rents across the country, how are we going to drive rents back down when in most cases we could probably continue to raise rents? Even a lot of our first-time home buyers that are looking at buying right now, they are still saying that their landlords are asking them for higher rents when their renewal comes up. I just had a client over the weekend. Her rent went from $1,600 to $2,100. We've had another client. They were in a 2-bedroom condo paying $2,100 a month in rent. Now they're in a 3-bedroom house paying $2,300 a month in rent. So these rents are continuously rising. I've yet to come across anyone that's told me that their rent has stayed the same or they're paying less money in rent. So if that's one of you, definitely comment below. I would love to hear what part of the country you're living in and what your rents are, just so we get a better idea on it, because a lot of the conversations that I'm having is going the complete other direction. And if that number is also impacting the inflation number, then how are we going to get that back down to 2? And again, that's where I think it gets a little scary when you start thinking about what needs to essentially break in order for us to get to that 2% range. And a lot of times, from what I've heard in the past and saw, is that the job markets are usually the last thing to go before we head into a recession and things really get bad. And that really, really sucks, because there's been a lot of people over the years that have been doing everything right, building up portfolios, saving money, doing all the right things. And I would hate to see people lose their jobs because of consolidations or position eliminations and just other things out there that could potentially happen. And especially for heading into the 3rd and 4th quarter of the year, where you go into holiday season. So I think this is also a good time to really start getting your finances together, get a budget, start figuring out what expenses can you eliminate. Maybe do some debt consolidation, maybe look at working some overtime, finding a side gig, finding other ways to maybe generate some income, because what if this economy that we're in gets worse, and who knows how long does that last for? Is that another 6 months? Is that another year? I don't even know what that's going to look like. All I know is that there are people that still want to buy houses, but we're trying to get them to understand to not get in over their heads. I think so many people right now are making the mistake that they're chasing the market in order to buy a house. I had a client that I was talking to the other day, and I really tried to talk some sense into him because he was all over the place. So he had talked to 2 or 3 different lenders. They said he was pre-qualified and he could start shopping for a house. So I asked him, what